Good morning, good afternoon, good evening, wherever you are. I hope you are having a fantastic weekend so far and that you've smashed some goals. Today I'm going to be talking about robo-advisors. They've gained so much popularity lately that I figured it would be a good time to actually discuss some of the key concerns behind them. I found this pretty good article written by a guy named Joe Berto. I'm going to leave a link to this article in the description down below if you'd like to obviously check out some of the other content that this guy has. Has 102 followers, so I guess any support would be great for the person. So it's titled, How Robo-Advisors Are Changing the Investment Industry. Investing can be a daunting task for many people, especially those who are new to the world of finance. The traditional way of investing is through a financial advisor who charges high fees and requires significant minimum investment. However, with the advancement of technology, a new type of investment advisor has emerged: robo-advisors. Robo-advisors are online investment platforms that use algorithms to manage client portfolios. They provide investors with an alternative to traditional financial advisors by offering low fees and a lower minimum investment requirement. In this article, we will discuss the benefits and drawbacks of robo-advisors and explore their impact on the investment industry. I'm also going to be adding my own commentary towards this because at the moment, the only thing that has been drawn out regarding robo-advisors here is that they're a competitor to, let's say, financial advisors, but I really think it's disruptive, typically in the investing for themselves people. So in the market where you're looking at certain exchange-traded funds and you're looking at investing broad-based funds, let's say the global all-world stock market, well, a robo-advisor might give you the diversification or give you the right idea of what to focus on. This is with the whole movement of AI, but I'm sure this will be discussed later in the article. So what services do robo-advisors offer? Robo-advisors offer a variety of financial services to their clients. One such service is goals-based investing, or GBI, which is a new approach to wealth management that emphasizes investing to achieve specific life goals. Instead of using a risk aversion metric to select investments, GBI focuses on minimizing the probability of failing to achieve a minimum wealth level within a set time period. See, that I quite like. That's such a good strategy. It's by avoiding failure, hopefully we can find success. So here, there's already quite a positive here with the goals-based investing. Minimize your risk of failure, and then hopefully, if you try to avoid failure, that you'll do well over the longer term. Now, of course, there is, and I will come back to this later, but there is certainly something you need to be subjective about. We have human minds. We have to have our own opinions and thoughts. When it comes to actually analyzing investments, a robo-advisor is not really going to be a strength there. Instead, robo-advisors are going to be key and crucial for looking for a diversified portfolio and picking out good index funds or exchange-traded funds to look for to really balance out a diversified portfolio. So this already, I can indicate, is not for the individual stock picker. Like you say, you might have been interested in the whole advancements of artificial intelligence or AI. ChatGPT, you've got Bard AI with Google. Now you might go, well, brilliant. I can speak to an AI. This AI can communicate to me how I can best look to find certain investments. And whilst it can give you the pointers, let's say push you in the right direction, it can't give you really an analysis on an individual stock and share, because one person might find that the price to earnings ratio of this stock over here is too expensive, but the other one might say, actually it's fair value for the industry and therefore it's a buy. This obviously adds complication, but let's carry on. Another service that robo-advisors provide is retirement planning. Now, I've done a lot of content on retirement planning lately on the channel. If you haven't seen the retirement readiness quiz, then click the card at the top right of the video. This includes determining the appropriate balance needed to replace a desired income level, accounting for inflation, cost of living in the retirement location, and tax rates. Once retirement is reached, robo-advisors can provide advice on how much to safely withdraw from the retirement account. Again, I quite like this. The hands-off approach, like the retirement funds that have a target date of, let's say, 2060, what it will do is it will automatically reconstruct its diversification between stocks and bonds so that when you get nearer to that retirement date, you have a larger portion of income investments through bonds instead of stocks and shares. This obviously lowers your volatility and potential risk and is great for a hands-off approach. It effectively removes a lot of emotion involved where someone might sell and then go, oh, well, I'm seeing this stock rise up. Because ultimately, I think a great way of, let's say, removing emotion from investing is buying an index fund every single month, paying from your salary straight into an investment account before you even see the money go. A standing order or direct debit set up. That way you've removed emotion, especially if it's automatically invested into a broad-based index fund. Well, robo-advisors almost go a step further in this regard, so that they can obviously do this automatically and then start shifting this automatically over the period of your life. Responsible investing is a service that has gained increasing interest in recent years. Robo-advisors offer this service by finding liquid ETFs, exchange-traded funds, to construct portfolios and provide customization according to the investor's responsible investing preferences. Robo-advisors elicits clients' preferences on ESG issues and alter the securities held in their portfolio, changing their weights or substituting them accordingly. So you might here for a second go, you know what, I don't like investing in oil. I'd like to have an investment portfolio that is globally diverse, but I want to avoid oil. Oil I don't think is lucrative enough. I have my own reasons for not liking oil. I think oil is unethical, let's say that. Now these robo-advisors can give you that flexibility and find a new way of reconstructing or rebuilding a portfolio. Smart beta and factor investing is a strategy that is becoming increasingly popular in the institutional space. Although there are a few smart beta products available in the robo-advisory space, 2.7%, robo-advisors that provide this strategy primarily use smart beta ETFs managed by funds. Some clients may want to define their own portfolio to express specific market views or to account for investments held outside of a robo-advisor's platform. User-defined portfolios allow this option while still providing all the benefits of automated portfolio management. When the client customizes their portfolio, a robo-advisor provides immediate feedback and suggestions about the risk of the portfolio. So here we are, we're looking at more of a hands-off approach, but this comes to the disadvantage I'm talking about here, that whilst, let's say, this AI, this robo-investing can create great risk analysis, it's still subjective. There could be risks that you could perceive in person, but can't quite quantify or qualify in text. There are obviously more risks to that. That gut feeling is also crucial. But I think in the future, let's go forward 20 odd years, perhaps we're going to be using robo-advisors and AI, and it's about finding the correct balance between the two and what we can really learn from it. Okay, the robo-advisor says there's some risk here because cash flow in the future is uncertain. The business model is, let's say, selling floppy disks. Floppy disks aren't really used as much these days, but they are seen as a collectible item. Well, this could be a concern going forward because whilst they're a collectible item, there isn't much use case for them, and so it's not very much a growing industry. This is where the risk analysis could be quite crucial, but you might know, or actually as a collector of floppy disks, the market is booming and actually there is a place for them amongst very, very niche collectors, and what the business will do is specialize and focus on very high price premium floppy disks. Of course, that was a business I just made up in my head, but you get the idea a bit. Finally, many robo-advisors are also trying to provide advice on cash accounts through cash management services. This includes projecting the growth of the cash account based on expected changes in interest rates and the client's planned future deposits and expenses. Robo-advisors also use algorithms to make recommendations on optimal levels of liquidity to safely cover immediate and expected expenses. Some robo-advisors have moved strategically in the direction of traditional banks, offering services like cash and checking accounts, debit cards, and lending. So it goes on here to talk about some examples of robo-advisors. So you've got Wealthfront here, which has an account minimum of $500 and an average fee of 0.25%. There's Betterment, which has a similar fee of about 0.25% or 0.4%, but it looks like they don't have actually a minimum amount. Obviously, this article is tailored to people in the US, but there is a platform in the UK, and I think it's owned by JP Chase, and it's called Nutmeg. When I used Nutmeg back in the day, I think it had higher than average fees, but effectively, you paid up for the robo to be doing everything for you. So realistically, robo-advisors probably sit somewhere in the middle. You could go for the approach of going, I'm going to invest in an S&P 500 fund, and I'm obviously going to automatically invest that money into that every single month. Well, if you're doing that, you're probably going to be paying of about 0.06 or 0.07%, a very, very low fee. But let's say for an additional 0.2%, you might argue that robo-advisors could be an effective tool. From memory, and this was about 2 or 3 years ago, Nutmeg's fees were about 0.45%, so certainly higher. And we do obviously want to be reducing fees. Reducing fees is a certainty because then we know that we're going to get greater overall returns, not through better investments or better investment quality, but instead through the idea here that if the average annual return over the last 30 years of the S&P 500 is about 8% per year on average, then reducing the amount of fees we've got there means that it doesn't have to be as high to the average. Inflation is obviously going to factor into this as well, so keeping fees low is obviously vital in an investment strategy. Robo-advisors and AI. Is there a link? The use of artificial intelligence in the robo-advisory industry is a topic of interest. However, it can be challenging to determine the extent to which AI is applied in practice, since investment firms tend to be vague regarding the functionality of their algorithms. While there is a consensus that AI is not yet a relevant topic in robo-advisory, some firms like Wealthfront have implemented it for additional features such as Path. This tool can provide answers to questions you like when you retire or which neighborhood you can afford to live in. I quite like that. That's quite a great aspect here. And this is probably what we're going to see going into the future here. We're going to see that AI in particular is going to take on more of, let's say, a customer services front. They're going to be asking questions and AI can sort of picture it for you and provide some analysis on it too. So adding this into a robo-advisors package where they can go, oh, here we are. This is what we anticipate based on the average returns of, let's say, standard benchmarks. Here's the total income you'd require to live. Here's how much you should be depositing each month. That's great. That's great for the average person, the person that doesn't want to put too much into finance and therefore has pretty much most of the work done for them. All they've got to do is make the money in their life. As the ETF market becomes more sophisticated and profitable through the application of AI, there may be less incentive for robo-advisors to use it to enhance their returns. Instead, they can invest in these ETFs. While AI is not a prevalent feature in the robo-advisory industry at present, it is worth considering its potential future impact. Again, I think really, in terms of exchange-traded funds here, of course, robo-advisors, even AI is going to have some form of an advantage, or at least going to lower the skill floor for a majority of investors. But when we go to the subjectivity and we look at individual stocks and shares, is this a good quality business? Is it going to grow in the longer term? Well, AI can obviously identify, okay, this is its business model, here's its competitors, but then to put a distinctive value on what each share price could be, well, it can't really do that because it requires you to value more things than another. I, as an investor, might value the cash on a balance sheet more than I value the current profitability of the business. Or alternatively, I might believe that retained earnings are very important and that a large amount of retained earnings is good, but someone else might go, actually, the property and the equity is what's key here. Again, it's so subjective that there's kind of a limitation here. You could probably say, okay, does it pass this certain criteria and does it tick off these boxes? But realistically, it's still not going to be able to give you what you would want there in terms of, is it a good investment? Goes on to talk about the advantages of robo-advisors. Two of the key strengths of robo-advisors are low fees and low minimum investment requirements. As seen before, the minimum investments for robo-advisory services start at $0, whilst the upper limit for direct fees in the US is 0.89%. Well, of course, that makes sense. It's much cheaper than a financial advisor. And obviously, I would definitely take the time and opportunity to speak to a financial advisor for a fixed fee. But especially if I was considering or have a large portion of wealth. But I think, yeah, robo-advisor could be a greater alternative because it sort of knows what it's doing. It can place the money where you can be comfortable doing other activities in your life, and it almost reduces the stress that you might have from going, oh, I've put 1 million in the S&P 500. I don't know if that was a good idea because I haven't done enough research on it. Instead, it's out of the way, out your mind. And you've even got that path thing again, that AI that goes, oh yeah, this is where you can be in 10 years, keep saving. And it's almost like a remotivating tool here. So it seems like it's going to be a very hands-off approach to investing. It's discussed here tax loss harvesting. Nonetheless, the usefulness of tax loss harvesting is limited in two countries using different tax rates for long and short-term capital gains. In Germany, for example, a uniform tax rate prevents tax arbitrage of this type. I really butchered that last paragraph and I can't even talk properly like I've got a lisp. This is quite interesting here because the idea that you could effectively tax loss harvest, depending on obviously what country you're in, but let's say, right, and I think we've got a process in the UK that means if you sell an investment, you can't repurchase that investment for, I believe, over 30 days. Otherwise, it's considered as you're still holding that investment. But let's say you were clever enough to find a distinction, and this robo-advisor goes, right, what we can do is just before April, before the tax year ends, obviously pretend it's a robot, I'm doing this as a human. Before the tax year ends, what we'll do is we'll sell your investments and we'll purchase a very, very similar investment, a very, very similar exchange traded fund with a slightly higher fee for now. So what we'll do is, because you're currently at a loss, we'll purchase that other investment, and then what we can do is obviously swap this over in time. This way we can obviously maximize our losses so that therefore we have greater tax or we pay less tax in the future. So that could be critical there outside of a tax wrapped investment account, which quite frankly I don't personally invest in any investment accounts that aren't tax sheltered because a majority of my money is in my investment ISA. Established algorithms and automated rebalancing, which according to a study conducted by Reher and Son in 2016, the robos to outperform both self-managed as well as mutual fund portfolios on a risk-adjusted basis. It's important to consider, I think it is 79% of active fund managers fail to outperform the markets here, so it's a good step in the right direction that these algorithms and automated rebalancing is able to outperform the typical mutual fund portfolio as well as self-managed. So yeah, there could be some great advantage to this. And this is what I was talking about earlier, less emotional decision making. A study shows that financial advisory can outperform regular retail investors by up to 3%, which is partly because professional investors are less emotionally driven. And this says Kinnery et al. 2016. I'm guessing that's a reference to study. Then robo-advisors are likely to perform even better as they are not driven by emotions. That is the biggest advantage by far, and probably even the dark side of robo-investing here, because it effectively removes the human element. Once you've, let's say, designed and you've got yourself an investment strategy, you know exactly what you're looking for. You know, okay, I'm going to invest in this specific type of investment. I think it's going to grow over the next 10 years. The robo-advisor could then find ETFs that formulate that strategy. And as it's going up and down, where you might be going, oh no, I'm down 20%. I can't bear to see 200 grand down at the moment. But actually, because you're not looking at it as well, and obviously it's a combination of the two factors, not looking at your investment portfolio regularly, and also kind of knowing that the robo-advisor's got this handled, it's off doing its own thing, it's doing what it does best. It's probably a great hands-off approach and probably great for having a stress-free lifestyle. If, let's say, I wanted to maximize my lifestyle to reduce stress, then I'd probably look towards a robo-investor personally, because investing in individual stocks and shares is far from stress-free. Talks here about disadvantages of robo-advisors. Investment costs are not minimized. The users typically bear the cost of brokerage, transaction, and other fees and expenses, whether directly or indirectly, and thus contribute to the robo-advisor's compensation. Furthermore, Fain 2015 states that robo-advisors reserve the right to change their fees at their discretion. This can be an indication for advisors using the low fees as an initial feature to attract new customers until they have a large enough customer base and increasing the fees afterwards to generate higher profits. I didn't consider this at all, and it's a very, very good point by Joe here. This is so true. So what they can do at the moment, obviously, is keep the fees lower. Keep them less than a financial advisor, marginally higher than exchange-traded funds, and you're paying for that privilege. As the fees can slowly step up, this robo-advisor firm is getting more profits, and you're probably more ingrained. You're more locked with almost loyalty because you've been with that robo-advisor for so long. It's built up almost a reputation with you. So you're probably sticky. You're quite a sticky customer, and you're probably going to stick with that robo-advisor rather than move. But then again, if there's enough competition in the space, it depends how accessible it is to be a robo-advisor, then maybe there'll be a lot of competition which will keep fees down. That's an interesting point. And I wonder what you think on this down below. So leave me a comment at the bottom. What do you think? Do you think fees will increase for robo-advisors in the future? It's the same with AI. ChatGPT, what is currently free at the moment, there is a paid model for it. Do we think AI is going to remain free use? Or do we think actually the fees are going to increase and increase and increase until eventually a majority of the general public are locked out? Who knows? The questionnaires they fill to identify what individual investment strategy suits are not sufficient. It seems that due to the lack of personalization in risk assessment and rebalancing, robo-advisory does not meet the need of investors with moderately complex requirements. I completely agree with this. It's very true that robo-investors do not meet those needs. Because you must have seen it. If you've been looking at any of your financial accounts, let's say your pension, you've got to do this silly little quiz so that you're able to unlock let's say more risky investments. And what you find is it's actually not very helpful at all. It doesn't help you in any way in terms of a direction. And these robo-advisors go, what's your tolerance? Some of them go, what's your tolerance for risk? And you'll go, yeah, all the way. But it doesn't really mean anything. You need to be more tailored. And I think that will really improve with time. And that's something that will make it a much more desirable approach. Again, if they combine robo-advisors with AI, that's where it's truly key. Regarding a survey conducted in Italy in 2016, 49% of the polled persons would not use robo-advisory services without the support of an in-person consultant, Nicoletti 2017, especially in wealth management, where traditionally high net worth clients are present. Personal contact seems to be more important. Of course, that's human nature, isn't it? But again, I suppose perhaps this is going to change over, let's say, the next 50 years, where our reliance on technology is far greater. Our reliance on artificial intelligence is also so vital that we kind of lose that human touch. I get it. I would prefer that I've got someone looking into it, but to also understand the limitations of said person. How is this, let's say, investment consultant, what's their incentive? How do they make money? What are they incentivized to do? Are they also incentivized with you to grow the value of your investment pot over time? Or are they incentivized to purchase high fee funds that they get a commission from? Now, I'm sure there's laws and stipulations in place to prevent that, but there's going to be some things they're not going to truly align with you with. Whereas once a robo-advisor is set up correctly, I truly think that you could have a very, very capable investment strategy with that at hand. The impact on the investment industry. Robo-advisors have disrupted the investment industry by providing investors with a new, low-cost alternative to traditional financial advisors. This disruption has forced traditional financial advisors to lower their fees and improve their services to remain competitive. I quite like that. Obviously, by pushing down fees, that's great. Reducing fees can hopefully improve our overall returns. Moreover, the rise of robo-advisors has led to the development of new technologies and investment strategies. As we have seen, some robo-advisors are now using artificial intelligence and machine learning to analyze data and make investment decisions. This has the potential to revolutionize the investment industry by providing investors with a more accurate and personalized investment advice. Joe, that was a great article. I'm just going to put his profile up on screen here. Joe Burt is the name, and I'm sure I'll leave a link in the description down below. 102 followers. Definitely check that one out if you're interested. So now that we've discussed robo-advisors, let's have a look at my portfolio. Let me just drag this slightly over for you. See, I'm down £14,678. If I'd have perhaps initially started with a robo-advisor, I could have been doing better. But I think over the longer term, I'm going to have a unique advantage here, and that is in my ability to think. Robo-advisors can calculate based off of predetermined formula, but the human mind is unpredictable. You can do something at most or at random that can completely throw off AI or robo-advisors. And I think by utilizing that form of a strategy in the markets, especially where if you're picking individual stocks and shares as a target to outperform the markets because you think you can filter through and find the higher quality stocks at a good price, I think the investor has an advantage. but only if you do your due diligence, spend plenty of time reading the annual report and accounts, and perhaps even have a balanced strategy by also referring to said robo-advisors and AI for, let's say, ideas, for inspiration, or even for risk analysis. Risk analysis could be absolutely crucial here, and there might be some points that we're missing completely. If I went and asked an AI, okay, what am I missing? What's the risk as well? And perhaps it can bring it to you. For instance, we could be discussing MasterCard stock. We might be looking at their business model, or perhaps the concerns that they may have in terms of regulation. By using AI, I could go, okay, what's MasterCard's greatest concern? And it will talk about how regulation has become, more prevalent, but it might also come up with another idea, something that we hadn't considered, or you wouldn't have found without hours and hours, maybe even days or weeks of research to truly comprehend and discover. I truly think that AI has a place for all of us in the future, and I think robo-advisors could be a good way to get some integration there. I hope you enjoyed this video. I'm really motivated at the moment. We're going to be smashing out loads of content. I'm also going to be updating my Patreon at some point. Obviously, I know I'd let that stagnate, but there are some big things on the way, so keep an eye out on that front. If you haven't already, definitely click that subscribe button and drop one of these, as it is much appreciated. I do check and see who has been loyal and who has gone to the end of a video, so if you chuck this on in the car journey, then definitely give me a shout and say that you have. Have a fantastic day.